U.S. futures are firming up ahead of today's critical catalyst. The S&P futures are up 0.05%, Nasdaq futures up 0.8%, Dow up 0.4%, and the Russell 2000 futures up 0.6%. The 10-year yield is holding near 4.34%. The dollar is slightly weaker versus the yen. Oil is down about 0.4%, and gold is up slightly. Asia overnight, Nikkei down 0.05%, the Seng down 1.36%, and the Shanghai Composite up 0.17%. China and the US wrapped 2 days of talks in Stockholm. No major breakthroughs, just vague progress and in a likely 90-day tariff extension. The friction now is around China's purchase of Russian crude. Australia's inflation came in cooler than expected, boosting chances of a rate cut in August. Singapore's central bank held steady and warned of a slowdown. Tesla signed a $4.3 billion battery deal with LG. Europe opening hour. The FTSE 100 down 0.21%, DAX up 0.12%, and the CAC 40 up 0.56%. France is outperforming after a beat on Q2 GDP and consumer spending. Italy missed the mark. Germany was in line. Spain's inflation ticked up again. The IMF upgraded UK growth forecasts and said the Bank of England could cut rates twice this year. We have a crazy macro calendar today. 7 a.m. Central Time, MBA mortgage applications, 8:15 ADP employment report, 8:30 a.m. Q2 GDP and GDP price index, 10 a.m. pending home sales, 10:30 a.m. Department of Energy oil inventories, 1 p.m. Treasury refunding announcement and FOMC policy statement, 1:30 Powell press conference. No changes expected from the Fed, but Powell's tone will be closely watched. Earnings on deck. Before the open, HUMANA, ALTRIA, KRAFT, HEINZ. After the close, the big boys, Microsoft, Meta, QUALCOMM. These mega cap names will set the tone going into the second half of the week. Positioning is tight going into today. The market still expects one rate cut this year. Institutional desks are watching small caps carefully. The Russell 2000 has bounced, but the rise in non-earners is a red flag for sustainability. Copper continues to outperform gold heading into Thursday's U.S. tariff deadline. Commodities may remain volatile as global trade pressures build. U.S. fixed income remains king. Deep liquidity, stable demand, and strong foreign interest keeping treasury flows intact. Bottom line, systematic flows, AI capex, and earnings resilience are keeping the market buoyant. So stay disciplined, stay focused, stay profitable. I'll see you at the close to go over what actually happened. God bless.